Welcome everybody. Another webinar. This is celebration of passing 700 member on GPG. Actually, Win GPG community. Congratulations to all of you and myself as well. Elvin, Thomas. We work hard for this community, and we're just gonna continue destroying it. All right. So the most requested topic is traps. Oh, there you go. I was wondering what happened. All right. Sorry. So the most requested basically topic was traps. A lot of people had trouble in finding the traps and different zones that they're having problems. So what I'm going to do is explain you one more time what is exactly. I'm just gonna go in depth because the only way to make you understand these traps is to keep repeating it, and show you more and more example. It's better for backtesting if you backtest it, but if you can't, just I don't know why you can't, but if you can backtest it, just watch as much as webinar you can about this topic. Before I go to the chart, like always, let's draw some stuff. We got, this is a zone, and this is also a zone. We look for three of them. Sometimes they're just exactly same place. Sometimes, which is most of the times, they are in different places. But if you understand what you're exactly looking for, what are these zones, how you can, relate these three each other, you have what you need. So I'm going to explain you exactly when I'm looking and I'm drawing different zone, what I'm looking for and why I do that. So the first zone in here, oh wow, okay. Can you stop drawing on my chart? Let me clear it. I know there is some way, just give me a second. All right, so when the first zone we are going to look is trap zone. All right, that's our first zone we are going to look. It's trap zone. And then we get another one, which is liquidity pool. And then there is another one that is high or low of, it can be day or week, or previous day or previous week. You all should know it. All right. So when we talk about each, what are we basically mentioning to? The trap zone, I'm just gonna draw, imagine this is a price. So when it acts as a resistant and retail trader, I'm just gonna put one word on it. Retail traders view. All right. So trap zone is basically retail traders view of the market. They see it as a resistance. So market maker basically, they can see it as a resistance, or they can see it as a support. They can see it as a support that is broken, retested, staying there. What retail trader usually look for it? It can be support resistant, it can be supply and demand, it can be whatever name they call it. But the zone that the reason for drawing that zone is nothing we care about. Market reaction over there, or market respected this area more than 3 times. We don't care about this. That's how market maker trap people. So that's why I call it trap zone. Then there's liquidity zone. Liquidity zone is where retail traders stop losses. So liquidity pool is basically where retail trader having their stop losses. One easy way to identify this liquidity pool is actually another trap zone. It's another place that retail traders see as a support resistance, so they are going to have their stop loss below that zone, right, or above that area. So that area that retail trader going to have their stop losses is liquidity pool. And high and low of previous day or previous week, this is what retail trader don't really see, or if they see it, they see it as a support resistant. But why we have a different zone here is because most of the time trap zone is below the high of previous day or week. So retail trader are seeing, let me just redraw this. So retail traders seeing a support being respected. You know, let's say this is the high. It jumps so high though, but it's okay. I'm gonna move it. Imagine this is high of previous day. And this is our trap zone. Market push to high of previous day, acts like it's continuing, and then they reverse. Where they go? They go to liquidity pool, where is stop loss of retail trader. So now this is how you can understand it more easier. This is a trap zone. Retail traders see it as a support, high of previous day being broken, or just, you know, they go there, activate the orders, manipulate everybody at the high, which is basically after time when they come to the zone, it's changing from high of the day to another trap zone. Okay, if it's confusing you, that's it, how it's supposed to be. You have to watch this webinar like 10 times. I have more than, I think, 10-15 video about these traps in teaching, just, you know, just repeating these things over and over, because that's how you learn. So high or low is where market maker trap before and then push to that zone, will change that high or low to a trap zone, and then push to the liquidity pool where retail trader have their stop losses. It will be in YouTube, yeah. So, and you can see that it's a perfect daily structure, okay? So now, one more thing I should add. I already said that high and low of day or week will be a trap zone, and you have to know that liquidity pool also will be a trap zone. How? After price came to the area, grab the liquidity, so they start manipulating that they're going down, but they continue coming back up, or however market makers see the liquidity going to work. So one more time, this zone changed to trap zone. All right, so it was a liquidity pool, it was a high of the day, but now you can see how all of them can be a trap zone, right here and right here. So I hope you have a pen and paper. Exactly, liquidity pools become next trap zone. Exactly. What do you mean by baseline? Or the ceiling or baseline? Oh, don't worry then. So now I hope you have a note, pen, and paper that, you know, there is trap zone, liquidity pool, and higher low of the week. But liquidity pool and high and low of the day or week will be a trap zone later. And it's very important to understand this trap zone, because in order for market to move from point A to B, they need to trap people, create liquidity, so they can move the market and grab that liquidity. And this is the exact concept I'm drawing for you here. there has to be a trap zone, high or low of another, day or week. So market can go there, change that to trap zone 2, then go for the liquidity. All right. Everybody understand this so far? Is it easy? Yeah. Awesome. Perfect. So now let's see the charts. I'm in Euro USD. The reason I'm in this pair right now, because it's the most manipulated pair in Forex market. All right. The most manipulated pair in Forex market is Euro USD. The reason is it's the most traded pair. So when it's most traded pair, obviously it's most manipulated pair too. But if you learn trap zone, trust me, you're gonna enjoy trading this pair, So now let's see what we talked about. Right here, you can see that this acted as a support area here. So I'm going to make it yellow like this, well, orange, because it's a trap zone, right? I'm just gonna show you the exact thing I just draw for you happening in the market, maybe not in this example exactly, but I'll show you in the examples. So in this trap zone, let's look for another area retail trader potentially going to have their stop losses. So this is one area that acted as a support resistance before, right? If you don't like it, then this is another zone that retail trader think is support and resistance. To all, there's 51 people in the call right now. Out of all of you, is there anybody who traded this before? Used to draw this line, see that market reacted, so he thinks that this is a valid zone and have their stop loss below or above this zone? I'm sure there is, because I was one of them, and I'm sure there is more people that was like me. There you go, showed up. Thank you guys. So this area, when you are buying it here, your potential stop loss going to be below here. And look where market came. Market came right to the area that retail traders see it as a support resistance. So they have their stop losses below or above this level. So this level going to be our take profit zone. This is our liquidity zone where retail trader have their stop losses over there. Okay. So now you see that I told you guys at the first that this also can be another support resistant area. And notice the shift for one candle came, grab the liquidity, trap more people. You can see they came back above this zone. They came back above this zone, created more traps, then came to the liquidity zone. All right. So where is high or low of the previous day in this case? Right here. So now let's make this red. Cool. Now we got our trap zone, our liquidity zone, and now you got high of the week, basically. High of week right here. You see Monday formed a high, grab the liquidity from this trap zone, and then came back above it, pushed to the high of the week. You all know what's going to happen around here. Spread will open up and then comes back down, trap more people, came to the liquidity. And now I want you guys to notice this. They came to the liquidity zone finally, but now this is the moment right here. This is that moment when liquidity zone became trap zone. This was a liquidity zone for us, came, hit the take profit. It was a perfect kind of Tuesday reversal for us. Tuesday price came to high of Monday, came back down, came to a liquidity zone, and now what they did is trapping sellers to the liquidity zone, come above, stop hunt those sellers, add buyers in the area on Monday, go for the liquidity again. So now if I go to higher time frame, let's go to daily. All right, I'm just gonna find if this zone, this little one here, was any sort of support resistance, because that was my liquidity zone. Look at this. Look at this. The respect to the area. So when there was swing traders that had, oh, it gets more funny. There you go. So there was retail trader that had their stop losses all the way through this support. They're thinking they're smart, but notice that price will come to their liquidity, grab their liquidity, and almost same thing again happen. They trap them below that, what, daily support, weekly support, what time frame you want to call it, I don't know. A huge weekly resistance support, whatever was there, got trapped. You know, they say the higher the time frame, the more valid for support and resistance. So those retail courses that are more expensive, they don't teach you more stuff. They just tell you to go to higher time frame so they can be more valid. And I'm showing you right now how a weekly support resistance, it's going to be monthly if I want to go after weekly, even the monthly, weekly support resistance will be trapped, guys. So many of you comes to me, especially people with more experience. They tell me, are you crazy that you're going to analyze the market in 1 hour? You predict the market in 15 minutes time frame. If you really understand, that's my answer. If you really understand the fractal nature of the market, that everything from that higher time frame is basically made by these little candles from 1 minute's time frame. So if you can actually figure it out what's going to happen in a period of day, you can predict what is going to happen in course of year. I promise you. If you understand the daily structure, how daily movements of market will create that big trend of the higher time frame, and how these trap zones, liquidity pools will create those support resistance for retail trader, you're not gonna be wondering anymore that why the hell Humayun goes to 15 minutes and predict the market and it actually plays out. We had this USD CHF trade. You can see in this week, the only part I went wrong was when they're going to, well, it was right in most of the pair, like USD CAD, but it didn't push the last time up. We already knew it's going to, stop on down, but the stop on was much higher, and that's matter of liquidity. You can see the trap was here, but I want to show you this. Let me just move it up a little bit. That the prediction of market, this part was played out perfectly. And this is how market is created. This is how trends are being created by a single daily structure. You can have, this is a day, this is another day, this is another day, and this is another day. The matter is your understanding of how market make its move, using daily structure over and over, trapping people and creating that trend. This doesn't happen in weekly time frame. You cannot see this pattern in even a 4-hour time frame. In 1 hour time frame, sometimes it's hard to see, but you can still figure it out. You can see just like here, you can see that, daily structure trapped everybody, W formation, and then another one, and then another one, and now consolidating. So after this consolidation, now I'm changing it, right? So predicting this market not going to take times for me. This might be higher, so it can be start of a higher high around here, start of a new uptrend after this, downtrend. And you can see this trend was already is kind of broken. So now you can watch and see how this is going to play out. And you see, I didn't do anything. I just saw the pattern, 1, 2, 3, stop, okay, trap. And what I see is trap zone here, guys. That's a trap zone. You should already know. Yellow or orange, trap zone. Red one, high or low of previous day. And then we got a green one, which is can be here or can be here. That's gonna be first liquidity pool. So this is gonna be my TP1, and then this is going to be my TP2 right here. And obviously this last one that is just created will be my take profit 3. So I basically, when you go and place a trade here, look like this. There is a green zone, there is a red zone, right? And there is an entry point. Retail trader have their entry at trap zone. Some of them, their stop losses at previous high or whatever, they take profit is here. These are people who actually saw the market correct, but they get stop hunted because that's how it is. They're taking the trade based on support and resistance, but so they get a stop hunted. There is another bunch of it that actually buy this after here. So their take profit gonna be like higher. Well, actually they're a retail trader, so they take profit gonna be 50, and then there's stop loss from 32 to 60 to 90. I have live example right now. Like someone sent me signals of one signal provider he got for the past week, and it's funny. The risk to reward is like this. Literally it's like this, and I think the guy is kind of doesn't know what the fuck he's doing. Like the risk is much higher than the reward, so if they lost something, they lose big. If they win small, and it's stupid. Just don't ever do that, guys. Logically doesn't make sense that you risk more than what you can potentially make. Even if your win rate be 75%, 80%, fuck 95%, you will still lose. You will still lose in long run, right? So this is for another people. You see how their stop loss was at our liquidity zone, but where we enter the trade. We enter trade at that high or low after it becomes a trap zone. Note, write this down. We enter after high or low becomes a trap zone, right? So our entry will be around high or low, because I'm not talking about those big entry at wick. I'm actually looking for entry after, when you try to enter at the high or low of the day, you have to wait for candlestick confirmation. All right. So when you entered around here or whatever, let's say here, your stop loss, usually is around 20 pip if you want to take the high, and your take profit would be like this. So around 115 pip. And guys, notice your entry should be here, not to see that drawdown. You know, you have to wait for that trap zone and then write that thing down. And right here, that's where your new position can come in, adding more and continue eating. Okay, so I hope you guys understand my point. Their stop loss is our entry, and it's whether our entry or it's our take profit. You can enter, basically if you take a really good trade, you enter where some people are getting stop hunted, and you take profit when a bunch of others are being stop hunted to their liquidity zone, right? So this is very important, and you can see how kind of our entry, our take profit, and our stop loss kind of made it together. But again, ask this question from yourself, that if 90% of people lose 90% of their account within 90 days and all do same exact shit, why the fuck you want to do that? You just go against the majority, against the 90% that doing same shit and losing their account. You just go against. It's not really hard, but apparently it's not hard to understand, but apparently it's hard to do it. All right, let's see if I can find any pair with the better any pair you guys want me to check for you guys. I think AUD was good. Not bad. Let me see. UCAT, sure. UCAT is that baby. Let's go. I was just going through this pair for VIP, but let's do it. All right, let's find some trap zones and all kind of stuff. First trap zone I can see is this start right here. You see how price stopped right here. Notice this is Friday, so market closed at here and opened down here. So retailers say that, oh, price rejected this area and created a big zone, you know, big gap over there. So this is that main trap zone right here. Okay, and you got the low of previous week and current week right here. Notice we said take low and high of day. So if you go to just going to 4 hour 1 second to show you, I personally, everybody knows, I don't basically come to 4 hour to find overall trend. But if you can't see the overall trend using lower time frame, just come to 4 hour. But don't waste your time. Just draw these two, okay? And then draw the induction that you can see. So this is the induction I see. If you don't know what is induction, you either have to join VIP or Academy, or even there is free videos on YouTube. I have explained all of this to you guys. So just check it out if you don't know. I'm not gonna put the links down below in the description. You have to go find it by yourself because I don't have time for that. But please go and learn. It's good stuff. So you saw the description. You saw the induction too. I'm going back to 1 hour time frame. So now I see that this induction in higher time frame, you see 3 touch, 4 touch in 4 hour. Retail trader believe this is actually the trend. They got the resistance. The resistance is working. Trend try to, you know, they try to break the trend, but ooh, this resistance hold the price. And look at the shift just before, when they go just higher than what it was before. Okay, so the trap happened right here when they push the price down below this higher low. What happened now, guys? This zone changed to trap zone. So you can get your entry right after you see that the engulfing candle or a railroad track. This is a railroad track. And after this candle could be your entry after engulfing. Super valid, super valid. And your stop loss going to be 15 pips is enough to be below the low, but you can go for 20 pips just to have it, be more sure about it. And where is going to be our basically take profit? Price push down all the way to this low, make this low a trap zone. Overall trend for us is up. So what is the high of week or previous week? They can potentially go, and also retail trader are looking at it. Now it's time to look left. This is the first one, the first liquidity pool for us. Reason being this support, kind of support resistant here. You can resistant here. So they came and just hit the stops above it and then retested it. Now let's find another liquidity zone. That's another one. Retail traders see this resistance, so have their stop losses up above, so they get stop hunted, as well as now they're being induced to sell. Lower liquidity zone becoming a new trap zone. So this is one of the reason every time I want to basically predict or even analyze or backtest, I simply just go and remove everything. Because if you want to keep all of this on your chart, within a week, you're not going to understand anything from your chart. It looks ugly. It looks not clean. It's not simple. This is not how we want it, right? So delete everything. Don't be lazy. Every week this is your job, guys. This is your job. Take it serious, right? So weekly structure, price is coming down. I'm just going to make it even more simple to see how you could take it. Price was in an obvious downtrend, low of previous week. You see, got to stop hunted. And if you want to add a little more spice to it, it's going to be a signature trade. That's how, our master Dylan don't even really draw all this support and resistance, because a lot of back testing, and he doesn't really need. He can see what retail are looking at it. Fake breakout, touch of the trend line, trap buyers, hit the stop loss of buyers, now trapping sellers. This is a different variation of signature trade, that they first stop on the high, then stop on the low. Basically this day it was a big whipsaw. But we already told you before that high of previous week or previous day, in this case this is previous day, and also this gonna be, well, didn't hit their previous week, but high of Friday and Monday was broken. So retail trader was seeing this as a trend break and retest, adding to their buys and get a stop hunted. So this is just to confirm, just to show you guys that when I say market, in order to move from point A to B, doesn't matter how many pip is in middle, 5, 10, or 200 pips, they need to trap some people, grab some liquidity, and then go for the other liquidity. Without traps, this is how market looks like. If there is no trap, there is no movement, there is no liquidity. So if you see pairs are going ups and down like madness, trust me, there is a lot of traps up here. Like if I want to just draw it, let's go to 4-hour and see how many traps on. I have 2 minutes time, but I'm just gonna show you. You see, this is when sellers getting trapped. Another one, sellers being trapped. Another one, sellers being trapped. Notice how these zones are being broken one after another and then go back up. Now same zones, you see they come up, stop hunt below them, make this support a resistance before they move up. I'm not sure if you guys get it, but you see how they trap last second this week induced, like this is a resistance right now just before they push the price up. Again, right here, trap of resistance and high of previous weeks. Stop hunted, acted as they're going up, so they stop hunted all the way back down. What was the zone they broke before they move up? It was a resistance that became support, was validated, then broken as a resistance. So we want to buy this W that retail trader are selling it. All right. Awesome, guys. I hope you guys like this session and I hope you learned something and I could simplify it for you. I have less than a minute. Thank you for joining. We have a promotion going on, 25% off for VIP. So if you need it, just hit me a message, t.me/GPG Forexia. I wish you guys a perfect, profitable week ahead and let's kill this market. Thank you guys. Thank you for nice words on chat. Thank you. Peace.